mean, we were invested at Sasol. And then we sold.
Your favorite.
Yeah. Exactly.
Yeah.
But funny enough, he lost us money on something.
No, man. Like let's be fair. It was impulsive. So it's one of the things. Investors, what you need to do. No, it was an impulsive thing, and when you really look at it, it doesn't make sense.
But you see, that's the great thing also about investing, which is also know when your stop loss is.
Exactly.
Right?
Yeah.
I think sometimes you just have a feeling like, no, I don't want to be. Because what it means when you sell at a loss means you're confirming that you made a mistake.
Yes,
correct.
yes.
You're and it's not nice.
Looking in your losses, it's not nice.
I'll be honest with you.
It's terrible.
I'll be honest. I don't have. I was affected once, so I have actually worse than you have. Actually, I invested in Steinhoff, right?
He did as well.
And
we're gonna speak about Steinhoff today.
I did not have a stop loss.
Yeah,
and I was like, you know what? It's fine.
It's fine. It's gonna
now they're delisted. Now it's gone.
Yeah, it's gone.
So
it's gone.
I wish I had a stop loss because there was a time when I was like, no man, at least if I get half of my money, I'm gonna be fine.
You're gonna be fine.
For the benefit of the investor.
All right, investors, welcome to episode 14 of the Investment Candle podcast.
Let's go.
Again, my name is Chipiwa, aka Chief. I'm not rolling alone again. I'm rolling with the tech guy. As always, the guy that has made millions from Sasol. Today he's not wearing any Sasol related merchandise.
Bro, and it's weird.
How are you doing, man?
I'm all right, bro. You've been making that joke since I think episode 3, and it's still funny. It's still
I'm
funny.
laughing.
It's still gonna be funny.
It's still good. It's a classic.
But yeah, man, I'm great. Absolutely fantastic. Yeah, man, I'm so excited.
Yeah,
I'm excited for this episode.
I mean, we've got a guest here, Mathew, and our tech guy, our technical guy is also Mathew. So there was a lot of confusion. It was like, which Mathew?
You'd be like Mathew, and I'll be like, yes.
How you doing, man?
I'm good, thanks.
Yeah,
I'm happy to be here.
Yeah. Welcome, man. I think there's quite a lot of things that we're gonna cover. Quite a bit. I know Mathew from far. Like you've been boys from first year and
2014.
stuff. 2014. You know, back in the day.
In the year even.
Look, we're not that old. But anyway, I think the first thing we're gonna do is to kind of run through our portfolio, and then we'll delve into the chat with Matt.
Yeah, man. So Mathew, like the first feature that we always do is we just go through our portfolio. And basically just discuss. Feel free to come in if you have any observations that you might have made from the following companies. So number 7, we only have 7 companies. So number 7, as far as performance is concerned, it's Sun International, of which I'm gonna. In fact, let me actually delve into it. So Sun International was a company that was picked by me, and it is underperforming at the moment. But recently, in fact, 2 weeks ago, they came out with the final year results. Remember, we
talked about it. Yeah,
we spoke about it in last episode as to why I like it, and it was purely, I thought that it was going to ride the wave of the COVID recovery as far as tourists coming back. And in fact, it did. So let me just get into the actual performance before I get into the nitty gritties. Performance is negative 9.3%. It is our lagger.
Was it not positive in the last 2 weeks or so?
No, it was not positive. It was just negative.
Okay.
Yeah, but now it's
because
really
I'm thinking
negative.
It was,
but in essence,
has it gotten worse though?
A little bit, but I think it's nothing fundamental. In fact, if you look at the fundamentals of the business, they still work. I just want to go through the numbers actually as to how it looked like briefly how it looked like. So I've taken, there we go. So look out for 4 percentage numbers, of which I'm going to get into. The first one is 7%, 4%, 86%, and 17%. What is 7%? 7% has been the top line revenue growth of Sun International for the year ending 2023. Yeah.
And do you know what was the growth previously?
Yes. Well, okay, the growth in rand numbers, I can quickly calculate it, but it grew 7% to get to 12 billion. So it's always been at about 11 and some change.
Mm-hmm.
Now it's at 12 billion. The 4%.
So probably just the base adjustment, right?
Yeah.
Because it was a low base and then riding
Correct.
the COVID wave, and then now it's kind of corrected to the correct base.
Correct. So that's the riding of the wave part. Where the magic is going to come in, it's with the 17%. But let's start off with the 7%. That's top line. Then the 4% is the adjusted operating profit. That's the 4% growth. Headline earnings, 86% increase. Headline earnings.
Is that in, okay? They still haven't bought the
not yet the Piedmont Group.
Yeah. Okay.
No, not yet.
So those numbers are not impacted by the business. Okay,
No.
cool.
In fact, they're gonna finalize the sale on that by the end of this year.
Okay.
And then the 17%. That's my favorite number. It's 17% because that has been the growth in resort and hotels, as far as income is concerned. And that is what I was basing my whole investment thesis on. And that I knew that online gambling is going to continue growing at over 100%. It was going to happen. Where I thought that the magic was going to happen was that the resort and hotels business, that's what's going to see an uptick. And that grew by about 17%. Now, I think that...
Wait, so the 17% is the growth in what? The income in
is
that revenue specifically on a business unit of
the
resort
and hotels.
Okay.
Yeah. I was quite happy about that.
That's quite interesting.
I was quite happy about that. I was really happy, Matt, because like that is what I kind of that was my linchpin for my investment thesis on this business, because online gambling was always going to be going to shoot the lights out. I needed something else which was going to be different. And seeing the recovery of that, I was quite.
But majority of the business still comes from the resort, right?
Majority of the business.
Does it come from the resort, or is it coming from the online gambling?
No, it's gambling by far. It's 73%.
Online gambling.
Yeah.
That's quite a chunk.
73%.
73% of income is online gambling.
Damn.
And it's Sunbet.
And you're saying it's growing at what rate? At what?
112%.
And it's 73% of the business.
Yeah, bro.
That is insane number.
That's Sun International. So MoneyWeb actually had a nice headline. They said Sun International's online betting bonanza. Yeah. But that's Sun International. And then we have...
wait, before you move,
before
you move on,
is intrigued?
No, I am. But I mean, you did say that your investment case was more or less based on the growth around the resort.
Hotels,
so has that changed now, or like what's your view now? Do you still want us to keep it? Do you want to sell it, or do you want to hold?
It's still going to continue growing. Like I said, as far as our visitors coming back to South Africa, that figure as a contribution to GDP, in my opinion, is going to double. At the moment, tourism is contributing about 3%. Before COVID, it was at 6%. We are still going to see a growth. Yes, there are risks. Risks of the load shedding risk. It's always going to be a challenge, especially, and also socioeconomic crime. Crime is a thing. So that's always going to undermine things like people visiting this country. Logistical issues, our roads are not the greatest. So people wanting to take that road trip from Palabora all the way down to Cape Town, it's a bit of a challenge. However, I think...
Which I do not recommend.
You don't recommend, eh?
Not safe.
Driving between Cape Town and Limpopo.
Yeah. You've done it before?
I've done it twice. That's
that's
quite a long journey. No, the road is fine. I mean, like along the N1, it's good. It's a very good road. But I mean, what I'm saying is that it's a very long journey.
It's long.
It's a very long journey. But it can be
enjoyable. Like you can see the beauty of the country. You can see the wonderful hotels.
You basically have the whole experience.
True.
If you do that, but doing it more than once.
That's what I'm all drived out for that.
Any more questions on Sun International before we move to Discovery?
No. We can move.
Discovery. We have Discovery at number 6. We have Discovery at number 6. It has slightly deteriorated. But not by too much. We've lost a whopping 17 rand. It's a lot.
That's not bad.
And then number And then number 5, we have British American Tobacco. That was his choice. British American Tobacco.
Yeah,
we spoke about it as to why he likes it. I don't agree with him, but like he likes it.
A safe bet. Everybody's smoking.
Exactly. Yeah. You see, that's the thing. That's the thing. Like everyone is gonna keep on smoking, and just the competence that they have and the experience that they have in terms of navigating multiple markets, right? And now that the whole entire industry of tobacco is undergoing changes from regulation, also from just the products themselves, right? So it's just about betting the right horse in the industry, and I believe that bet is my horse in that regard.
Awesome. No, solid. I like the rationale. Then we have number 4, which is Nasus. In fact, Anglo Platinum is doing better than Nasus.
Yeah, I saw. I do have Anglo on my personal one as well.
Yeah,
and I got in when it was like just over 500.
Just over 500.
Yeah, and now it's on 800, I think.
Look at that. Hey, that's a return. That's a return, Baba.
When we have our next podcast in Mauritius, we'll know why.
Exactly.
Look at that. Nice. Fantastic. Fabulous. Fabulous investment, bro. Fabulous. Good stuff. Then we get to the serious end, which is the top 2. We've got ShopRite. ShopRite. Like, what more can we add?
There's nothing more we can add, man.
What more can
they came out with really good numbers as well. Again. And growing market share every day because of what's happening elsewhere, like Pick n Pay and Spar having troubles and having brand identity. It's like Pick n Pay don't even know what they're doing now. They just keep changing things and all of that. So it's ShopRite has been capitalizing quite well on that in terms of tapping into all those different markets. So it's we'll see. I just don't know how their apparel business is doing. Unique. I don't know if you've heard of it. They haven't shed much light around that business.
It's supposed to compete with Pick n Pay clothing.
Exactly. I've bought from them. They've got a slightly premium material compared to Pick n Pay clothing. And it's quite decent clothing, right? But I think, it's still on their early stage. Brand trusting, it's still in a thing and all of that. So like if you go to the store right now, there's a lot of write-downs because the stock is not moving as much as
Interesting.
And obviously the season changes and they need to put in winter clothes. They still have summer clothes that hasn't moved quite a bit, so they need to write that down. So, because in order for someone to pay high, it's not only about the quality, but it's also about the trust on the brand, right? You can produce a very good clothing item, but if you have not built that credibility of trust, no one is going to be willing to pay a premium compared to like the stores that they already know, right? So I think it's just that thing that they need to build now, like to kind of build, and it hasn't been attached to ShopRite brand per se, right? So that's why you haven't heard about it quite a bit, because they're not really attaching it to the ShopRite brand.
Where did you go? Where is the unique store?
There is one in Table Bay. That's in Sunningdale, just around.
What did you buy?
Yeah,
I bought a couple of t-shirts and shorts.
How much did you spend?
They're very good.
How much did you spend?
They were write-downs. It was about $500 for like 3 items.
Okay,
$500 for like
3 items. It's okay. It's good.
Write down, but I think it was like 40%, 60% off. So yeah.
And they're not sponsoring this video, by the way. Not. So that's ShopRite at plus 9.43%. So to the good.
Nice.
And then number 1 by a long way is my company, Captech, at a positive 35.44%. Quite happy with that investment. It's doing well. My 2 cents, briefly. No, they haven't come out with their final years, if I remember correctly. But just briefly, I think with with this current banking environment, we saw Standard Bank release theirs. Investec recently as well.
First rent as well.
So I think what's important there for our investors is that don't necessarily look at the top line, because a lot of the top line has been influenced by the high interest rate environment. I think what you're looking for there is looking at impairments. I think the bank that has managed to manage their loan book the best, I think that's when you're seeing good risk management. And I think in this type of environment, look at risk management more than anything.
And how's the business bank doing, the Mercantile Bank that they bought?
Can I give you that answer when they actually announce?
Okay.
Because
is it the first time we're going to be getting results with sets of results with Mercantile numbers included?
And it's not Mercantile anymore. It's actually Captech Business Bank.
Yeah, I know, but I just wanted to be specific on what I'm talking about.
We'll see. I'll briefly share as it's my company, but man, Capitec, it's 35.4%. But that's the portfolio check.
That's a very interesting thing.
Bro, what are your thoughts on our portfolio?
Look, I like it. That's one. I think overall doing really well. I like the common thread here, which is your two best businesses are both serving, I would say, your everyday consumer. Right? So it's ShopRite and it is Capitec. And I think the beauty, sometimes you take these things for granted, right? When you're like, oh, can they really grow better or faster or even more? But it's like, you just need to look at competitors sometimes to see why is like other banks struggling, whereas Capitec is doing so well? Or why is other retail like Pick and Pay and others struggling, whereas ShopRite is doing so well? And being able to just over and over again serve your everyday consumer or your average consumer and serve them really well, because that's the bulk of the market on the country and also on the continent. So I like that both of them are doing really well.
Yeah.
How long is the horizon, like the time?
The 10 of them, I think it's 6 months. But
6 months.
Yeah.
Okay, about 6 months.
So not too bad,
and how are you thinking about like when you exit? Because also timelines.
Yeah.
Sometimes you get lucky and
Good
you
question.
just enter at a really nice time.
Yeah.
But how do you know you're riding the full benefit?
Are you talking about Capitec in particular or just in general?
Just in general, your overall thing.
No, I mean, we assess the individual investments on their own separately, right? I mean, obviously also take into account the diversification effect, right? That we look at holistically, okay, is our portfolio diversified given the market conditions that are existing and what we think the market conditions are going to be in the next few years? And then we will assess investment. Like, for example, ShopRite, right? Like, I know for a fact that, the valuation, if it comes to like 280, 290, then it's time to exit because I know that it has run its benefits. Unless if they buy another business, they grow another business or the apparel business, then I know that there's still gonna be an embedded value that is going to increase and put that runway on the valuation. But once it gets to 280 at the existing operations, I know for a fact that I'm at a point where it's time to sell.
Where is it at the moment?
I think it's playing around 250.
Okay.
Still some room. There's still some room for that growth. But also it's one of those businesses that I would own forever, right? Because it's such a good. They are good business that you just don't sell, man. Like,
it's fabulous. It's fabulous.
If you got in at a good valuation, that's the key, right? Because you may never get that opportunity to actually do so. So I think that's pretty much our strategy, that we just look at the investment individually. I mean, we were invested at Sasol. And then we sold.
Your favorite.
Exactly. But funny enough, he lost us money on something.
No, man. Like let's be fair. It was impulsive. So it's one of the things. Investors, what you need to do. No, it was an impulsive thing, and when you really look at it, it doesn't make sense.
But you see, that's the great thing also about investing, which is also know when your stop loss is.
Exactly.
Right?
Yeah.
I think sometimes you just have a feeling like, no, I don't want to be. Because what it means when you sell at a loss means you're confirming that you made a mistake.
Yes,
correct.
Yes.
You're and it's not nice.
Looking in your losses, it's not nice.
I'll be honest with you.
It's terrible.
I'll be honest. I don't have I was affected once. So I have actually worse than you have actually. I invested in Steinhoff, right?
He did as well.
And
we're gonna speak about Steinhoff today.
I did not have a stop loss.
Yeah.
And I was like, you know what? It's fine.
It's fine. It's gonna
now they delisted.
back.
Now it's gone.
Yeah, it's gone.
So
It's gone.
I wish I had a stop loss, because there was a time when I was like, no man, at least if I get half of my money, I'm gonna be fine.
You're gonna be fine.
For the benefit of the investors, you mentioned stop loss. What is a stop loss?
Sure. Like, okay, for me, the way I understand it is there has to be a point where you're like, stop loss can be both quantitative and qualitative.
Sure.
So maybe you invest at 100 share price and you're like, if it goes below 50, because it's never gone below 50 for the last 10 years, the sentiment from just everybody is going to be like, this company's dead, right?
Yeah.
And you should be thinking, you know what, maybe I exit, right? Because that's quantitatively, you can see that, look, this doesn't make sense. Maybe also look at comparables and see where the other companies, in terms of their is it a P? Yeah, in terms of their earnings to value ratio, how do they look?
Yeah.
And then you can sort of have an understanding of, you know, what is my limit, right? And that should be something that you confirm. It shouldn't just be changing all the time.
Yeah.
And then there's also qualitative, which is, you know, I think you mentioned some stuff is like, let's say, for example, they're trying to open ShopRite is trying to open unique stores, and that's doing terribly, right? And in your assumption, you are like, this would be a new avenue for growth, but now there's no avenue for growth.
Yeah.
That's also a stop loss in itself.
Yeah. No, it's true. It's true.
And that's when you should be like this. I think, I think with the Steinhoff example that I gave, it hurts me still. But there was a point when I was reading issues about sort of a dispute that they were going to resolve. And then I read that actually it was not going to get resolved. And that for me should have been my stop loss.
Yeah.
But because I was already come on.
Back.
No, I didn't have one. So, you know.
But I think, you know, there's just so many things that you couldn't have known.
Yeah.
I mean, people's pensions were lost.
You know,
I'm talking seasoned investors. I mean, at the time when I invested at Steinhoff, I was doing first year of my articles. Actually.
Sorry, James, I'm not laughing at you. But
I was doing first year
we're
of my
going to get him
articles.
after the show.
yeah.
I was first year of my articles, and then I was so excited about investing. And then I see 90% of the value of Steinhoff has been wiped off.
Yes.
Right?
Jeez.
I'm like, this is my opportunity. What's the worst that could happen?
That's true.
The worst that could happen is that I could lose my money.
Yeah.
Right? And then I'm like, I could lose my money, but you know, high risk, high returns. That's kind of how this thing works, right?
Yeah.
That's true.
And then I'm like, Steinhoff is a big conglomerate.
Yep.
They've got Pepco in there.
Correct.
They've got a couple of businesses that can be, they've got a couple of businesses that can be stripped off and you know, that's me kind of building my investment case.
Yeah.
I got in, man. And then when I got in, I think the share price at the time was like 4 Rand, 5 Rand.
Sure.
And then it went half.
In a split second.
In a few days or something. And then it went half. And then I bought some more.
Jeez.
Yeah.
And then, I think I sold it like 2 Rand. And then I was like, okay, it's time to exit here. There's no hope in here.
Yeah, seconds.
You know?
Man, what do you make, just briefly, gents, Marcus Huster, at the time we are recording this, it was 2 days ago.
May his soul rest in peace.
Hey.
Yeah, what are you guys' thoughts on that, man? What are you guys' thoughts on the whole Steinhoff thing? And
No, I think there's one of the things that I was very frustrated about, I think, was the fact that his membership with Psycha, given overwhelming evidence in the public domain, in FSCA fines and all these investigations, etc., was not terminated, but suspended for 5 years, so a period of 5 years.
Okay.
And there are findings where there's not enough evidence for them to, you know, terminate the membership. I'm like, but in the public domain, there's overwhelming evidence that actually says
This is interesting.
this is something that even auditors have confirmed that financials were falsified. You know, then what do you mean when you say you don't have enough evidence to conclude on terminating the membership of this guy?
Interesting.
It doesn't make sense, right?
Jeez.
You know, and then I'm like, wait, but during the time of, do you remember Miss Quinana?
Miss Quinana, who's that again?
Who is that?
You don't remember Miss Quinana who was on the, what's this?
State Capture Commission.
State Capture
Oh,
Commission.
yeah.
When they said, Miss Quinana, you are a CA.
Yeah.
You are a CA.
Okay,
Something like that.
I
Remember a video
I
around
remember
that?
thing, yeah.
Yes, but after that, her membership got terminated with Saika.
Ish.
You know?
Immediately, actually.
Like, yeah, not even
Wasn't a
after
long time.
it wasn't a long time.
Yeah.
But yes, understandably so. There's overwhelming public information.
It's a lot.
There's overwhelming public information, right? That actually points to wrongdoings, right? That brings the profession to disrepute. Fine, you can make that argument. But then with Marcus Houston, like, what's the argument? I didn't get it, right? I really didn't. But yeah, it's unfortunate that he unfortunately died. But I would have liked for him to face the music.
Me too.
Yeah.
Because so many people's pensions were wiped off. I mean, the PIC was heavily invested in that thing.
Correct.
Yeah.
This is people's government. Like, this is people's pension funds.
Correct.
And these are people that do the marginalized work, like nurses, teachers, all this. These people depend on their pensions post employment, right? So it's quite sad, man.
Well said.
Them and their families, eh?
Exactly.
Yeah, it is unfortunate. I think for me, it was also like a reality check on how important it is, not just looking at the company, but also the management team.
Exactly.
Yeah, wow. Yeah.
On how the company culture is, right? I think maybe in hindsight, which is always not easy, I should have at least maybe internalized, like, you know what, actually, because the company's culture has just deteriorated to a point where there's no return. Even if some things might justify it, it's like, it's just, that's not possible, right? Yeah. I think also looking at the management team, really scrutinizing it. I remember I was bullish on them, but I was also biased because I think Alex Watson, who was a lecturer.
She was on the board.
She was on the board.
Yeah. She was on the audit committee.
I was like, I love that woman.
My God.
She told me accounting. I was like, she's great.
She's
in
very
her,
great.
I trust. But
and
also,
she was the chairperson of the audit committee.
So that's
I remember.
That is saying. Yeah.
So that was my bias, but also just everything had already been said, right?
Yeah.
The entire management team. I think maybe we should have actually scrutinized.
But I mean, look, the role of the audit committee really is to kind of scrutinize what the findings are, right? I mean, they are not the first line of defense.
They're not, but they are a line of defense.
Yeah, but they're not the first line of defense, right? I mean, they couldn't, and these are independent people.
Yeah.
Right? They need input from both internal auditors and external auditors to actually scrutinize that output, right? And I mean, they couldn't have seen that one coming.
I don't know. But like, no. But like, I think you've taken it far, mate. You're saying that they couldn't have seen it. What do you mean?
No, I mean, there's you could have seen kind of the culture, right? As a board member, you could have seen where the culture is going, but having to go to a point where, because even auditors didn't pick this up.
Yeah.
Right? Yeah. I mean, I'm paying someone
Deloitte.
to actually
Let's
go.
say names. Deloitte.
I'm paying
are we there now?
Dogs. They were there.
I mean, I'm paying someone to actually go into the detail and look into these things, right? And test the existence of it, the completeness, whatever the assertions are, right? But as an audit committee, I'm a consumer of that as much as pretty much the shareholders and all the likes, right?
Fair.
You know, there's no way they don't delve into the details. That's my point, right? That's one thing that perhaps the public doesn't recognize, given the governance structure. But fair enough. The thing about culture and obviously the fact, I don't think that there were any suspicions in the company, and I don't think there were there were indications of what's going on in the company, you know. So but it's very unfortunate. But to your point, I think we do cover quite a bit about scrutinizing the management, right? Having to
spot on, great point.
Because these are your drivers. These are drivers of value creation or value destroying that they are managing your money. So whatever decisions they make, they have a direct impact on the money as an investor.
And you're not, when you're doing in public markets, you don't just invest for a few months.
Exactly.
You invest in for a long time.
Yeah.
It's not designed to invest just for 3 months and then get out.
Yeah.
You invest in saying like it's many years, right? So I agree with you.
Yeah.
I think my take, gents, is that, okay, it didn't have to end this way.
That's true.
It really didn't. You mentioned how in the Steinhoff conglomerate, there were some high quality assets there. Pepcore is high quality. Take It Town was solid. I'm not sure how high quality, but it was solid.
It was really solid.
It's a very solid business.
That's a good business. So I reckon if, number one, I think if Mr. Eustace didn't run away, but if he faced the music, I think the company could have been saved. You can't just take good assets like that and then just disband them and then amen, it's over. So I think it didn't have to end this way, but due to personal misjudgments, I think we are where we are. But I also drew some lessons on the inflection point or the intersection between entrepreneurship and investments. So I look at Mr. Christovice and also Take It Town, how they sold their businesses in exchange for Steinhoff shares. And I think that's where I would encourage more entrepreneurs to watch the Investment Kennels podcast, first of all, but also to familiarize themselves with basic investment principles. Because as much as how you wear that entrepreneurship hat, you scale the business, you build the business, you dedicate your life to building a business, and then along comes a company and says that we want to buy you out, not for cash, but for shares. All of a sudden now, you're not just an entrepreneur, you're an investor, because in essence, they're buying a stake of your business, and with the proceeds that you're buying shares. And that's what it is. And I feel like a bit of risk management, a bit of investment evaluation can go a long way as an entrepreneur.
Yeah.
Obviously, I'm not expecting like DFC models and all that, but just a basic understanding of who you're going to bed with as an entrepreneur. I think it will safeguard a lot of entrepreneurs who are so focused on scale, on building a business. And then something like this is their downfall. I think it's a shame. I think it's a shame what happened to Take It Town. It's a shame what happened with Christovice. But yeah, like I said, it didn't have to happen this way, but it's where we are.
Yeah.
That's true.
Speaking of scale, we've got a man that actually built a business. Build businesses, funds businesses, and all of those things. I mean, it's most of the things that we talk about is the public markets, right?
Yeah.
But I think I just said, we've got Matty here.
Yeah.
He's a seasoned investor. He knows what he's doing in the market. So let's talk about this private market, but I think before we delve into the details, right? Like, yeah, just tell us a little bit about yourself, man.
Yes.
Like,
I'm so excited for this. Yes, I'm excited.
I know you. We've been mates since 2014.
Yeah.
So
it's a decade now.
It's yeah. Actually, it's a decade.
It's a decade.
Wonderful. What a full circle, man. I mean,
in an accounting class,
in maths class, we
sat next to each other in maths.
Exactly.
Yeah, I think so.
Yeah. Even in maths tart. I remember when
maths, that's what I'm talking about.
The maths tart. We are.
Yeah, UCT things, eh?
Sorry to exclude you. I might just take your position now on the podcast.
No, it's true. Yeah.
But just tell investors a little bit about you, like what you do, and the likes,
Okay. Cool. Thank you for the intro and thank you for bringing me.
Yeah.
I am Mathew. Born and raised in Mafikeng in the Northwest Province. And then after I finished matric, I went to ECT to study a BCom accounting degree, which I absolutely did not want to do. And I don't know if I told you this, but I never wanted to do accounting. But the only reason why I did it was because I got funding to study accounting. Right?
Awesome.
I actually really wanted to do something else. I wanted to do engineering, but look, nobody was going to give me. They said I was too. I'm not an engineer. I don't look like an engineer. So Anyway, so I sort of had to find my path. Also, not a lot of people from my school went to UCT, so I met lots of friends. I made a lot of friends at UCT.
Yeah,
lots of good memories. And then I went as far as doing my PGDA. which is like, I was like, you know what, I'm actually try and do the CA thing. I went as far as doing PGDA, and then I went as far as, so I thought I was going to do the CA route, and then I got into management consulting. So I went to the Boston Consulting Group, which for me was something I tried to work on for a while, right? I was like, if there's a way I can escape the accounting thing, maybe it's going to be consulting, right? If not, I'll try and do the accounting thing. So I tried, did a lot of interviews, didn't really go so well the first time. And then, sometimes when you're a lot more seasoned and you put the pressure off yourself, it works out. So I ended up getting in at the Boston Consulting Group. Actually, that was the firm that I didn't actually apply to. I thought I wouldn't get in.
Wow.
Because it is very competitive.
It is.
Especially fresh from varsity, very competitive.
Yeah. Somehow, I don't know how they did it. They trusted me. So I ended up doing that. And then at the time, they were like, no, we don't have a CA program, but maybe we'll have one in 2-3 years. So I still wrote my first board exam. And then life just happens, work just happens. My first project, I was on a mining site for 3 or 4 months working as a miner. I was like, yes, I finally get to be an engineer and all these things. And I forgot all about the CA stuff, everything. Like I forgot about it. I was there for almost 4 years. And then I sort of remember I was going to thinking about, actually 2 things happened. One was during COVID years, all the markets sort of crashed, right?
Correct.
That's the time when Nico made millions.
Exactly. So it's interesting because I was thinking about how in life you come full circle though. Because it was around that time. And I was like, I was very much save money every month and build that. Very conservative. And then I started sort of dabbling in different shares, right? And I was like, which business? And I was very uncomfortable with it because I like, you can lose your money. Used Easy Equity as my friend. And then I dabbled in doing, I invested in Captech. I also did Cecil, by the way.
Yes.
When it was like 30 Rand or something?
It bottomed out at about 28.
Yeah, somewhere there.
Wow.
And then I did that. I also did a few others like Imperial Logistics because COVID pandemics and logistics
kind of
needed to be
locked in,
But funny is that everything just went up.
Yeah.
Right? It was not because you're special or whatever. Everything literally just went up.
Yeah.
And I was like, yo, you know what? This is really great. So I took it a lot more serious.
Yeah.
You made some money, yeah?
I did make some money.
Sure.
And that's why I said I was sort of feeling invincible. And that's when I was like, oh, Steinhoff is next. Let me put my money in Steinhoff. Then right? But let me not detract. It was like, that's how like my investment journey started, right?
Yeah.
But then at the time I was still working at the Boston Consulting Group, but I was always looking to go. So my feeling was I would always solve problems for large businesses. So I'd work for the big banks, help them with this specific problem, help them with this. And sometimes they take it, sometimes they don't.
Yeah.
And I would say I was always interested in, helping smaller businesses, ones that I could actually touch, ones that I could actually feel and just feel like the value
The
there.
impact is quite large there. It's not very segregated, isolated.
Where you just work with one specific team.
Yeah.
And, sometimes, it's just like, I just felt like I wanted to be a little bit closer to the ground. And I've also felt that that's where sort of the opportunity in Africa is. So I actually thought I was going to either maybe start my own, but the ideas were not coming, right? I thought if I have access to all the knowledge from these consulting people, I get business ideas, they were not coming. Then I was like, okay, maybe I'll join a startup.
Yeah.
So there was a couple in South Africa that I was like talking to and seeing if they wanted to hire and so forth. And then around that time, I was just sort of positioning myself to join a startup. And then around that time, I think, when you put yourself in different positions, I don't want to say it's luck, but when you put yourself in different positions, other opportunities seem to come.
Yeah.
Right. So it's like manufacturing the luck. And then I got a DM from the company I'm working at now, which is Future Africa. We do early stage investing across the continent. And one of the managing partners messaged me and she was like, listen, I like your profile. Do you want to meet up? This. Our connection was we both worked at BCG. So that was one thing, but we didn't know each other. Right. And then I met her while I was really quite busy. And then she sort of sold, trust me, I was not interested in it. Right. I was like, I'm going to go join my startup or whatever. She sort of sold the idea of this being something that, is the right step in my career. And when I joined, I actually joined to sort of look after, it was like chief of staff to look after the portfolio companies, because we had like 80 portfolio companies across Africa.
80.
Look after them, give them strategic support and so forth. And I was like, yes, I'll learn about startups and then I'll learn how to build my own business. So that it just made sense. But then when I joined, again, the markets now went down again. So now we couldn't raise capital, we couldn't do so many things. And then for some reason, I just sort of became best placed as running in the investment side. So literally choosing the businesses, evaluating some of the startups. I got plugged in, and then sort of my role got shifted to now managing the investment team. And that's where I am now. I've been the head of investments for Future Africa's fund. We're targeting to raise like a $50 million fund. Fundraising is still very tough. And I'm the head of investments. I've been doing that since the start of last year. Invested in, I think, 12 companies, deployed maybe, I think, $5 million in those companies. So a lot of money.
Awesome.
Also a lot of responsibility.
Awesome.
Some are doing really well, which I'm very proud of. Some are lessons. I'm not saying that they're...
It's good that he put it as a lesson.
Some are lessons.
Some are lessons.
It's not bad investment. It's lessons.
It's lessons. It's lessons. We don't know. Because the company, they haven't shut down.
So
I'm
true.
not going to say anything.
You still can try some few things to actually salvage the business.
And that's where I'm at. So I spent 6 months. I actually work fully remote. So I sort of, my ambition is to travel through different parts of Africa. So last year I spent a lot of my time in Nigeria. This year I'm trying to do Nigeria and Kenya. But I also want to go to the other parts. It's like, I know Southern Africa. I know Zambia, Mozambique, all those countries, but I didn't really know anything above. Right. And I felt that that's sort of, if I'm investing across different parts of Africa, it's important for me to experience how life is there. So getting better, getting more seasoned, and that's a little bit about me.
No, that's
wonderful. Wait, you may have questions, man.
Please ask.
Like y'all were together for 10 years. Can you just give me an opportunity? No, but so you mentioned that the work that you're doing is at a firm that does early stage. How early? Is it stage 1? Is it seed? Is it what?
So maybe I explain it. So like, let's say you have a startup, right? The typical path is like, maybe you would join like an incubator or an accelerator, and they sort of do like your just
fine-tuning your
idea, helping you a little bit, some coaching and so forth sometimes, right? Maybe you can just start it off and just run ahead. You join that, and then when you're trying to raise money, you usually raise money from friends and family. So just like angels. So some people who have built businesses are like, oh, I believe in you, let me just give you a check. Then you go into, I would say, your seed stage. So seed stage is your first institutional capital. And that's where we are, right? So we are usually the first check, institutional check that a company would receive. So by then you maybe have your first set of customers. You maybe are you have some sort of revenue. You've got a product. We can sort of assess, it's very high risk, right? You can sort of assess where the company, what they're trying to build. You can assess the founding team a little bit. But we're not at the next stage. And the next stage is like Series A, then Series B, then Series C. And then you know what? You become $1 billion company, right?
You become a unicorn. It's everyone's dream.
Exactly. So we've got a few companies that we've been the first check.
And then they became a unicorn.
And then they've become a unicorn.
A dollar unicorn.
Dollar unicorn.
I mean, it's only dollars.
What do you think?
South African unicorn, guys.
Come on. There's no such.
Come on.
So real. So you guys were the seed. And they ended up becoming a dollar unicorn.
We've done that for 2 companies.
What?
Andela and Flightaway. So there's on the continent there's 8 unicorns, and then we have done that for 2 companies, and the third one is going to be Move, is another company which is valued. When we invested, they were, I think it was at $2.5 million when we invested. Now they're valued at $800 million. So
is it like the Move is the
vehicle
alternative?
Financing.
Oh, okay. So vehicle.
Yes, I see it. It is vehicle financing.
And they work directly with Uber and Bolt.
Yes. Because I was thinking, is it an alternative or complement to Uber?
Complement.
Yeah.
Okay. So Uber actually invested in them now $100 million.
Okay. Matt, so, okay, another question, mate, and then we'll get to
I mean, look, I brought him here for you.
Thank you. Investors, he's all ours. Nah, bro, like awesome story.
Thank you.
Very, very inspirational and quite relevant. So with our investors here, most of them do their investing in the public markets. In the private markets, obviously, things are a bit different. It's not as transparent as the public markets. It's a bit more risky. But like, if people say that I want to invest in the public markets, more specifically in venture, which that's where you are, right? How do you go about it? Do you look for a stockbroker as if you would go to a publicly listed? How do you go about it? Like, listen, I actually want my investment in the private and early venture stage?
Yeah, that's a good question. So I think even before that, the way I would think about it is like, there's different types of asset classes, right?
Yes.
And there's public markets, there's private markets, but there's also like commodities directly. There's also like real estate. There's also
fixed income
and so forth.
Yeah.
There's also
all of
art.
Them, you know, crypto, NFTs.
Yes.
Exactly.
What do we? So I think it's also important to sort of understand your own risk reward appetite.
Yeah.
It's the reason why I can talk about, investing in 3 companies and now they've gone to $1 billion is because, number one, the risk reward is there, right? But also, I have to be honest about the risk, right?
Yeah.
A lot of the companies we invested are not going to get there, right?
Yeah.
But for us, it's like, it's called power law, where it's like 20% of your companies you invest in will give you 80% of your returns, right?
Yeah.
So it's like you should expect losses, actually. Because when you do win, you'll get a whole lot more. So it's slightly different, and really understanding like the dynamics of what type of asset class this is helps you a great deal, right? So it's also called, there's a power law piece, but there's also this fund returner, which is like one investment can return your whole fund, which is true for us because our fund size was $10 million for the previous fund. And this one company that I just told you about, Move, they've given us our whole money back, right? So
Epic.
It's like, if we convert and put that over that, but there's technical stuff, but then the whole entire portfolio is 80 companies. So just one company has given us all our money back, right? But you also have to get a bit, understand that risk reward dynamic. So I think that's sort of step one. I think step 2 is now when you're at a point where, and also just to be honest, only a small amount of capital goes to venture globally. It's like, I think 1% or 2%.
Like you said,
there.
it's very risky. Even with us, right? We just look at venture. We're like, this is not the space where we want to play at, right?
Exactly.
It's very high risk. There's a lot of disorganization. There's a lot of hand holding that you need to do as an investor. So if you're going to invest there in the early stage of the business, you need to have experience. You need to be active. You need to have time or either the money to pay someone else to manage the investment for you. Because this is a business that don't only needs capital. Because a lot of entrepreneurs think, no, I just need money and then I'll make money. And that's not how it works, right? You need people that have experience. You need people that have connections to actually plug you into spaces where you could succeed, right? But not to steal your thing. But that's the risk part. That in the early stage of the business is very risky.
The returns are there, but there's also the risk that's naturally put in there.
Let's be comfortable with the risk.
Exactly. And if you're now at the point where, I'm very comfortable with this risk because I'm okay with the idea of not every company is going to make it, but if one makes it, I could more than make the money I've made, right? Then the typical way, and it's starting to grow in popularity, is that there's a lot of people that are becoming angel investors. If you're an individual, you can be an angel investor, right? And the way that would work is, let's say I have 100,000 and I'm 100,000 Rand or 10,000 Rand and I want to put 5,000 Rand just to be an angel investor. I could do it just in one company or I could spread it out and have somebody do it. So there's different angel networks. Like in South Africa, there's Josie Angels. That's really popular. And they do sort of, number one, they bring you...
Does Josie Angel have LPs? I thought they just bring in different angel investors and have a community.
You mentioned LPs. can you expound on LPs?
I was going to ask him to expand.
Oh,
because,
sorry.
but it's fun
Yes,
because
yes.
we are the LPs.
Yes.
He manages the
Exactly.
LPs.
I'm a fund manager.
But nonetheless, LP is like a limited partner.
Yes.
So a limited partner is someone that just brings in the money into a fund, and then we wait, basically. But there's obviously a lot of things that we bring in as an LP.
Yeah.
We bring in experience. We bring in crowding in other investors. For instance, when we invest through our firm, we bring in other DFIs as well to come in as well. We bring in that we play a catalyst thingy. Mobilize capital.
Yeah.
We bring in our experience. We bring in other investees, companies, etc., etc. So that's kind of the LP. So the LP sits somewhere, brings in the capital. That's the majority of the role. But there are other things. But the main point is to bring in the money. And then these guys then manage our money.
They're the GPs.
They're the GPs.
General partners.
Yes.
Exactly.
And then they charge the fund or my money for managing my money.
Yeah.
Just as much as UTs, right?
Exactly. A unit trust would do the same thing.
You do the same thing.
Charge
like
2%.
Charge 2%,
and that's it.
20% of profits if they've made a unicorn.
That's the truth. That's the same with us.
So it's stuff like that. Yeah.
So like that's the way. So you mentioned angel, so you can go in as an angel and approach the business opportunity or the venture, or you can work or operate in the capacity of an LP. You can identify a GP and you invest through the GP, and then the GP goes out and looking for these businesses, and that's where you are. You're the GP.
You could say that. We manage the money for you, and to sustain our costs, we charge a management fee, so 2% every year to just sustain our operational costs, because that's how we make revenue.
But you also share in the
profits,
in the upside,
That's only after 10 years.
Gets a lot of free carry this one, eh?
Let's maybe hash those ones. now I'll be charged when you go to Mauritius. And I'm joking. Yeah, that is.
Okay, so I feel like that's important, guys, because I mean, some of the comments that we get, it's from the public market side. It's how do I buy shares? So I think here it's how do I invest in early ventures that could possibly become a unicorn? Like what are the mechanics? And I like how you said you can either be an angel, you can do it yourself, Chuck Norris vibes, or you can go through GPs, which I think I recommend that, especially if you're not
going to be active.
What I will say is that now, because the space is still to be democratized, right? There's still certain barriers. So sometimes currently what it is that you need to invest a minimum. You can't just invest 10 rand.
Very important.
There's a big mark as to how much you can do it. What we've tried to do in our fund, right, which is it's often been difficult for Africans to actually invest because usually it's in dollars, right? So now the exchange rate hits us. This is now the amount you'll say it's this much. But we're trying to sort of create these special purpose vehicles where people can actually, even with, just make it more retail friendly, right?
Okay.
It's not an easy road, and we still don't have it yet, but our barrier or our minimum is much lower than what you typically find in our fund.
Can you chat numbers?
Yeah, I can. I think the minimum that we do is $2,000 to $2,000 or $2,500 to be a GP or an LP. In our fund, but then it will be combined with everybody, because for us, there's also a cost for us to bring you as an LP. There's a legal cost, so we can't just take a small investment, right? We have to sort of group it all together, get to a point where it's like $100,000. And then, so we've got so many people that have given us the 2,000, 2,500, and then we get everybody together. And only if we're able to raise the 100,000, then do we bring you on as an LP, right? And also,
it's quite interesting because venture has not really opened retail investing in its history. Eh?
Yeah,
like the mere fact that you guys are able to kind of consolidate the individual retail investors and bring in as one LP of contributed, consolidated, syndicated and combine it. That's quite interesting because a lot of people want to tap into that space, but one, they don't have enough capital because obviously you minimum for a venture capital, they're going to be asking you, you need to bring in $100,000 because it won't make sense for me to incur all those legal costs, to incur those monitoring costs with you just to bring you on board for $2,500. I could bend that in just one day. You know, so that doesn't make sense for me to do that. So having to bring all those people in, it's quite interesting. I didn't know that actually happens.
Yeah, we're trying to do that. We also haven't necessarily. We've also found it tough to raise money from institutions ourselves.
Makes sense.
Yeah.
So we've also had to be creative and say, you know what? Ideally, we just want. Our thesis is that we just want Africans to actually be able to invest and earn the profits that we've also been able to make and earn something, and to show that this is a viable market, right? But that's also not, I mean, the minimum check size in many places is that you have to give $100,000, like you said. That gate keeps so many people out of the space. So for us to sort of bring and find a way to sort of combine and consolidate so that everybody can get in, at least it's still high. $2,500 is still a lot.
It's still a lot of money.
But at least it's
not 100,000.
At least it doesn't exclude a lot of people. Right?
Yeah.
And
you're opening it up.
Someone that probably has a $2,500 to invest, because this is money to invest. It's not money you're taking out of groceries, you guys.
So the caveat here is that when you give the money, you give it for a period of up to 10 years.
So there's a
You're locked in.
It's locked in for 10 years.
Yeah.
Because for us, it takes about 6 years on average for a company for us to exit that company. Or for the company to reach the valuation which we want to even exit, right? And we deploy capital over 4 years, and then the remaining 6 years is just making sure those companies actually get to the point of being like strong companies that we want to exit from. So it's locked in for 10 years. So this is money that you put it in, it's locked in for 10 years and we return the money back. Whereas if you invest in the company directly, you can always get out at different, because they're always raising new money, right? So maybe they'll raise as a seed round, the Series A round, the Series B round, or there's maybe a private sale on the side that you can exit. So there's also these considerations to take into account.
No, fabulous. We're getting a masterclass.
I think you already touched in terms of like the process of venture / private equity. I mean, private equity is a slightly bigger ticket sizes. I mean, you were talking about 10 million, 50 million. I'm thinking, but that's one investment ticket for the energy.
We're still small.
For the energy. But nonetheless, right? I think, you know, it's very interesting out there. Like what I would like to know for you personally, are you playing that role of being an angel / a venture capitalist in your own personal space? And what's kind of the thinking around that? Maybe it might help someone else out there that wants to also finance some of these businesses.
Great question.
I mean, we've had the chat, me and you, but it's good to put it on the camera.
Democratize it.
Exactly. You also need to be a part of it. Everybody else does. So I was going to say that I think that's also when I spoke about my initial touch on investing was actually when everything crashed. And then Easy Equities was my best friend. Right? And then I invested and I made some money from just shares. And that was what I was comfortable with because I was like, it's safer. Then I was like, okay, I've made a little bit more. Let me just see what else is there. My risk appetite sort of increased a little bit. And I was like, crypto. So I was like, crypto.
You went there.
So I went into crypto. Right? And look, also, you know, sometimes I just believe...
It seems our guests love risk, because even Boitumela did say that she did get into crypto.
I didn't see that coming.
So I first... Really?
Continue.
So I first invested in the fund. So it was like it was an index fund of a crypto index fund that had like Bitcoin, Ethereum, and all these things. But then sometimes you look at the total fund and then you see maybe one company that maybe has a small allocation and you're like, but this one grew by 30-40%.
Something better than the other one.
But for me, I invested in the whole portfolio and it's only moving by 3%. I wasn't feeling so good about it. So then I was like, okay, maybe let me try and go the individual ones. I'm not going to lie, I didn't know what I was doing at the start. That's the truth.
Yes.
I didn't know what I was doing at the start, but I know I didn't lose money. I know I made money, right?
Okay.
So that's one.
That's a positive.
Great
but
stuff.
it was also because I was also open about what I didn't know. And I would ask other people and say, hey, what are you doing? What are you doing? What are you doing? And I was just like, just trying to see how to, it's a completely different way of investing. From public markets in JSE and then to crypto was a big adjustment. And I know I didn't know what I was doing, but I didn't lose money.
Yeah.
So that's one, right? And then now having worked at Future Africa and doing early stage investing in companies, I've sort of grasped how to assess different projects, right? So how to look at something and say, oh, this is really great. Oh, this could work. This couldn't work because there's different heuristics. Like how strong is the management team? Yeah. Right. The next thing would be, how are they actually making money?
Yes.
Right. Is the way they're making money scalable? Right. So that's another one. Yeah. Then you'd also go into things like what is their traction? Do you have any customers signed up? Do they have any? What's their product? How does the product actually look like? Like playing with it, like doing, and those are stuff that I didn't actually do on crypto. All I was doing is looking at a coin and seeing it's growing, what, and then just say, okay, I want to put something there. Yeah. So I've developed and I've become a lot more, I would say, wiser about it. In terms of me doing what I invest in, it is JSE. Yeah. I believe in the JSE. I've never actually gone to
New York.
Those other stock exchanges, I've never gone there, right? Yeah. Not even via the S&P 500. I've never gone there, right? I believe in the JSE a lot. Then I've done crypto, and I'm still doing it. I'm doing all these things. And
What coin are you at now? Crypto. Any Bitcoin? Any
coins?
Ethereum? Coins.
So I'm joking.
Excuse me.
so
did you hear that? Coins. I love it. Yes.
No, the bulk of it will always be in Bitcoin.
Yeah.
Right?
Yeah.
Because that's the safe haven. That's the store of value in crypto.
Yeah.
And then secondly, it will always be in Ethereum. Yeah. And then the rest will be different altcoins, which is like more riskier ones.
Sure.
So that's how it would work.
Yeah.
The same also with the JSE's things. I think for me, I like that you also had these companies and all that stuff. For me, it was I really like the ShopRite, the Captech.
Of course.
I also really like Aspen because very defensible in different cycles.
Business cycles.
Yeah.
And there's others that I don't like, but those are like the bulk of my portfolio, right? And Naspers as well. But then I sold Naspers because I was holding it for quite a long time.
Yeah.
Yes.
And I was like, okay, for tax reasons, I decided to sell it. It made sense because you have the capital gains piece, and so forth. And then I was going into your question because I just wanted to make it, I had to provide the context because you asked me about angel investment. And yes, I have angel invested in a company, as in going and getting, saying I am an angel in a specific company, not with my VC
employer.
Sure. Personal capacity.
And I have done that. And that's again that was in a crypto company. Yeah.
Was in a crypto
company. Oh, wonderful.
In a crypto company in Southeast Asia. Actually.
In Southeast Asia.
Yeah.
Wow. How's that going? How's that working out?
I'll tell you in like they haven't released a coin yet. Very risky. Right? They haven't released the coin yet. Guys, please don't think I'm a scammer now. Please, guys. You see how you've exposed me.
You invested in the potential. Okay, no, let me just ask you with that. What did you invest in basically? What did you see?
Yeah. So I've been working with a lot of AI companies, right?
Yeah.
We've been doing a lot of research on different AI companies. We've made investments in AI companies. And sort of the one thing that I was sort of getting was, AI is kind of owned by, it's owned by monopolies, right? Big tech companies, your Googles, your OpenAIs, and so forth. And the issues that sort of OpenAI faced, which was they had a non-profit arm and then they had the profit arm and then they removed the CEO and all those issues.
Came back again.
It sort of highlighted how, even though their mission was to make it democratized and make it fair and make it for everyone, it was, for me, it highlighted how it's still sort of owned by these big techs in the US, right?
Yeah.
So I really just liked the idea of this company that had this vision of saying, we are democratizing AI so that anybody that can go on crypto can build a model and own that model and sell that model for themselves and make money from it. So I sort of believed more in the story of what they were building. And then what I did is I had a meeting with the team. I spoke to them. I could see how they were engaging. And because I've also invested in early stage companies, I was like, these guys are really responsive. They know what they're talking about. I was a lot more comfortable with what they were building. I could evaluate their business, how they're going to make money. I also had my own experience on the tech side. So I went through that. It wasn't just like I gave them. I spent a lot of time thinking about it. And then I was like, you know what? If there's ever a time for me to angel invest, I would do it in them. So that's what I did. I'll let you know in about a year.
No, let us know. Come back.
I'll let you know about a year.
Come back.
If it's great, then that's
maybe
how it works.
we'll shoot that next episode in Southeast Asia after all.
Sponsored by the proceeds.
Hey, hopefully. Hopefully.
No, epic.
No, okay, wonderful. I think it's quite an interesting aspect that you invest personally. I mean, it's I think there's a lot of businesses that we know of a friend or a friend of a friend that actually is building a business, and capital is always the biggest hurdle, right? That you need to actually do that. But obviously there are other things that I did mention that needs that to kind of help with growing all of that. But so let's talk this, because some of the things that we have discussed here are the fees. Right, that fees are quite
always scandalous, always controversial.
Hey guys,
let's chat fees.
Like, do you feel like the fees that because obviously, if in venture the fees are a little bit higher compared to like your normal UTs, compared to like your normal
private equity.
Well, I mean, yeah, but like in public. Okay. In public investments, and if someone is managing your money on public investments and all of that, the cost to get investment is a little bit lower versus if you actually investing privately in venture and stuff. So have you actually felt like you're earning your fees?
Yeah, that's a difficult question.
And then the laugh at the end. It's making me question my life.
No, like I think.
Do you feel the pressure though from like the LPs and stuff like that? Because I mean, the fees on the venture, because what happens is you've got your money locked in for the next
10 years.
7 to 10 years, for example, and every single year it's earning 2% management fee, right? Yeah. And as someone perhaps that is not really clued up in finance, they would think, no, man, shucks, you chowing my money every single year, it's gone. And I'm not realizing any value because you invested in these companies, you're waiting for a specific valuation to exit. We don't know what's going to happen in future, right? But I keep paying you for this management every single year, right? And one of the elements that we've seen is that it takes time for that value to be created, and it could even take more than 10 years, because after 10 years, be like, guys, unfortunately, we
the by the way, he asked this to all our guests. So
no, I'll take that. Yeah. So that's. The ideal future for me, right, is for us to be. I would love to see venture become more popular, right, and more open, because at the end of the day, you would probably make more money from venture than you would from any other asset class, right? And that's why for a venture fund just to break even, it has to do over 3x. So it has to do over 3 times. So if they have a $10 million fund, for it to just break even, be like one that beats the money market fund or beats the thing, it has to do over 3x. I don't know the exact number, but it has to really do quite well. If you take into account all the costs that people are incurring and so forth, how much you invest and all these things, and just to make sure that so that's the minimum, right? Unfortunately, not a lot of funds have gotten to that point. I'm talking from a very privileged side because we're in our 3rd fund. Our first fund did 21 times what we invested, right? Wow. So 21 times. Our second fund is doing really well. It's just that it's very new, right? We only stopped investing. It's only 4 years old. right? So we're still waiting some time. But I spoke about this company that we invested in that we're gonna sort of exit. That will return our fund, and anything else is just gains.
Yeah.
Right. So I do expect it to go over 5 times at least.
Sure.
So at least for what I'm saying is like on a personal view, if I think about our fund, yes. I think we are trying our best to earn
those fees.
Earn those fees, right? We're trying our whole best. Yeah. I would say though that like I'd love for us to get to a point where VCs are more transparent with their numbers.
Yeah.
So to say, hey guys, we performed 2x, or hey guys, we performed 8x, or hey guys, but you don't see a lot of people telling you how well they're doing. So it's also difficult to know if people are actually earning their fees as well. Like I mean, are you giving me my money back? Are you gonna do that? Yeah. Or am I just doing it because it's the good thing to do?
Good thing
but then I reckon as the space grows, like that stuff comes with maturity of the given market.
It does.
No, I think it's gonna get there, bro.
I believe so too. Okay, in closing, right? I think from what we've discussed offline and here, what I can get is that a lot of growth that, to be honest, for a company to reach unicorn faster, we know, as much as I hate this, it's tech, right? Like I feel like
I doesn't like.
Well, I actually have no idea. This is a whole podcast in itself. We need to have a whole issue. Yeah. And I didn't know this. I'm very hurt right now.
No, because I mean, look, what I've seen, right, is that there's a lot of value push up because of interest that comes from the way I think about it on tech valuation is that you've got a lot of demand as and when the business starts doing well, right? And that pushes up the valuation. And for me, sometimes the company gets so much overvalued that the downfall of that is a nightmare, right? You have to be really careful with a tech company because when it goes bad, it goes bad. When that technology that you believe in so much, it doesn't work out, then it doesn't work out, right?
I can say the same thing with any company.
No, but I mean,
same thing I can say with any company.
I like you.
Huh? No, but for real.
But with tech, right?
Yeah.
The hinge is on that thing. Whereas on other, say for manufacturing and all those things, you can diversify and do all the things. But the biggest driver, for example, if you're creating an operating system, right? If you're creating an operating system and it fails, you have really little room of diversification in terms of your revenue stream. But nonetheless, my question was towards where do you see the biggest growth in tech in Africa?
Yeah.
Because you've been in a couple of African countries and scouting the areas and understanding how the things work. East Africa, West Africa, Southern Africa. Where do you see?
Yeah. I was gonna just add on to that is that the reality with the way we invest, right, is that there's this I would say a point on atoms and bits. So atoms is like physical stuff, right, and then the bits is like software. We actually don't like software bits. We don't like that. We don't like pure tech. We like atoms, so a physical business that's just supported or enabled by tech. That's what we believe on the continent works.
Well said.
We don't like a pure deep tech or new ChatGPT. Like it's tough for us to like justify. And also
very difficult to value as well.
It's also we also know what we're good at. Right? Yeah. You saw me, I was on the mines on my first day and I spoke about that. Like so we like atoms and bits and the combination of the two. So I'll with you on that because we think on our continent, and I'm an expert on our continent, but we think on our continent the biggest value that we have is our people and also our land and also the resources sort of that our land has. And for us, like if we think of our people as atoms, right, then we think of how does software sort of supports the people. That, right? So it's like I'm with you. I actually agree with you on what you're saying. And sort of when I think about the biggest opportunities, I think they all center around how do we make sure that Africa, who's got in a decade from now, will have the most people in the world, right? We're going to have every people that all the people that work in the world, the majority will come from our continent in a few decades from now. So when we think about that, it's like, what businesses do we think would be the most important to make sure the people on our continent live a quality life, right? So it's like people need food to eat, right? So we think, okay, Nigeria is growing really fast. I think the average age or the median age in Nigeria is 19, or is it 16? One of the two countries.
Very young age.
So they're going to grow so much more, right?
Wow.
And we think they all need to eat. So what sort of food delivery, whatever would work in that situation?
Yeah.
Or like a healthcare would be like the people would need access to healthcare is currently unreliably priced on the continent.
Sure.
So which places can we price that well? Which businesses do we think are getting the right data to start pricing healthcare better for Africans to live a high quality life? Because we don't want the situation where Africans feel they need to leave the continent, because that's not going to be sustainable.
Yeah.
Africans will have to actually stay on the continent.
Yeah.
So that's the atoms piece, and that's the bits and how we think about tech. And we think those, also the value chain of certain things is broken. It's like, it's not complete on the continent. So you still need to get data on this, build this, do that. We also invest in real estate startups. We also invest in, we're generalists, so we invest in different type of projects. But the underlying theme is that it's a combination of atoms and bits that makes venture capital on our continent successful. Different to like Silicon Valley in the US and other places.
Wonderful. No.
Where the valuation in Silicon Valley gets astronomical.
Yeah.
And then you see things like Elizabeth, what's her name? Elizabeth
Holmes.
Going,
you see,
now another
the
Marcus
technology is now worthless, like stuff like that. That was the example I wanted to make, that, when tech fails, it fails. Because that thing made her a billionaire before it even launched to the market.
Before there was even a product.
How crazy is that you could push a valuation of something that has not made any revenue to actually be a unicorn?
Yeah.
That's madness.
I mean, but I really think that it's not necessarily a tech thing. It's a human thing. If I can remind you, there has been different types of manias throughout human history. There's tulip mania, which had happened. There was no technology inside there, but yet we see the same things. But for real, we just have to say, this really, really does happen. Enron happened. Enron happened as well.
Yeah, fair enough.
Similar stuff. You can sell, if you sell a good story, man, people are going to believe it. And I think that's just the case. But mate, I really appreciated this. This was amazing.
Yeah.
Thank you.
Thanks, Matt,
I appreciate it
for being here. Wonderful stuff on venture capital. But I think I learned that the venture capital is being made accessible for retail investors.
That is amazing.
And that is pure bliss, because there's quite a lot of people that could actually benefit from those returns, right?
Yeah.
But they have been secluded for specific individuals because it needs money. And agreed, it's capital heavy.
Yeah.
But if we are going to come together and say, let's syndicate a couple of retail investors and then put it together to people like Matt, that is going to manage our money and bring in 27 times.
And his fees. But
you can trust me.
But can I ask? I said I don't have any more questions, but I'm just remembering something about the special purpose vehicles, the SPVs. Is that an industry standard? So do all GPs have to have that?
No.
Or is it a choice whether you want to democratize who can be your LPs?
Okay. I'm going to try and explain.
Yeah.
So it's just a way, syndicate and a special purpose vehicle is like the same thing.
Yeah.
Right? So it's just a way of consolidating money to make it as one, coming from one entity.
Yeah.
So it's just a way of grouping and aggregating to come from one entity.
Yeah.
People might not like it. Like some funds don't like that because they may be raising, it takes too long. You maybe have to talk to individuals at some point. You'd rather deal with institutions that can give you $10 million, your $20 million. For us, it's what we're trying to do with what we have, right? So I think not everybody's doing it.
Yeah.
But also another thing is that it's not just these special purpose vehicles for funds, as in VC funds, but even startups have their own special purpose vehicles where you can also invest your 2,000, whatever, they might have a minimum amount, and they would also have their own SPV, and it just comes from one. It'll say something like Joburg Collective, and everybody that's part of the Joburg Collective would perform as that. So that's how it would look.
I'm on.
Wonderful.
Yeah.
I think we can sit here and have a long discussion.
Bro,
with
We probably
Matt.
will.
You probably will.
We can sit here and have a very long discussion
thank
with
you.
Matt. One specific thing about Matt that people don't know. This man has released the heat.
Caesar
He has
my
released
goodness.
the heat that has rocked UCT, the entire UCT.
But that was 10 years ago. I'm past my prime now.
I was at UJ. I was at
There's no
UJ.
more dance.
It's a Firetown residence. And
Yeah.
I was listening to that song.
To Grasha Lon.
For 1 year. For 1 year.
Come on.
That
Right.
1 year. You know, like that man, if it was during this time, I'm telling you, we would have won the Grammy. The man would have
No,
won the
I
Grammy.
did say that if I had YouTube, if YouTube was a thing that time,
Yeah.
definitely I wouldn't have done anything in career, corporate, whatever. I would
Yeah.
just have pursued that. I'm not lying.
Because it makes sense. Because just like I said offline, I thought Matt and K-Mac were the guys that we gonna wish we have signed autograph before they were famous. Because these guys were just, I'm like,
And I also had dreads and all that stuff. I was a very
Exactly.
different
You
person.
dress, dog.
yeah.
Like I said, let's cut the show now and then
Let's end it. Thank you so much.
All right.
guys.
Thank you so much.
Thank
Please like, subscribe, and
Yes.
comment. And
All that good
see you
stuff.
next time, gents.
Thank you.
Bro, this was
Good.
epic.